Hi everyone. Today we'll be doing confirmation with candle information. So it's the same as we did confirmation with your MACD and confirmation with stochastics. It's the same thing. It's just using candle information for your third reason to take a trade or your third confirmation to take a trade. So I know everyone that has been in our course is pretty clued up on candle information, how to spot them, but do you actually know when to use them? So I'm just going to go through some examples with you and show you when is the best time to actually use candle information for confirming a trade. As you know, you can't use it by itself. You need three confirmations, and candle information can be your third one. So, well, I'll just pick a random chart. Let's just pick the US dollar JPY, the one I'm on, and we'll look at some examples. Now, if you can remember, what we taught you is when to use candle info is only at lows and highs. So it won't always be at a low or always at a high, but it's always a possible high or a possible low. So that very candle has to be the highest at that point or the lowest at that point to form your higher high or your higher low. Take for example this hammer over here. Now this hammer formed your low. So this is a hammer we would have used as confirmation for a trade. And here again we have another one. Another hammer we could have used as confirmation for a trade. Now in between your high and your low you will find other hammers over there and over there. But as you see they did not form your low. Well, this one over here would have possibly formed your low, and at that point in time, your zigzag indicator would have probably looked like that. I'm not going to go and count the candles now. Let's just do it. Yes, so your zigzag indicator would have been over here at this point in time, and you could have possibly traded a buy from this candle upwards. As you see, it did go a bit up, but not all the way, obviously, because the trend changed over here. But let's go through some examples and see a perfect example of where we could use it. Let me just switch over to 1 hour. There's much more chance of us actually seeing a trade on there. Let me scan through. So what we're looking for, let's look for a ABC formation. So here we have a perfect A, B, C. So it's A down here, B, C. So you know we would have wanted to trade towards a D in this case. And if we wanted to do that, when price came down to form our C, we needed three confirmations to take this trade. So one would have been trend, one would have been ABC formation, and then your third one could have been your candle information. And here we see we have a kind of decent hammer that formed the possible C, possible higher low. And then if you took your trade at the close of that candle, you could have traded it up towards the D. And then again you see the D was also formed by a shooting star, and the shooting star then shot it down, which we wouldn't have taken this trade in this case because of our trend in our ABC. But let's move more back, and I just want to show you more examples. Again, here we have A, B, C, A, B, C over here. So this, we were looking for a sell trade. On this retrace, we would have been looking for a sell trade because of downtrend ABC formation And then our third reason we would have wanted to look for candle information. And then if you see these two little candles over here which formed a piercing line, well, it's actually bearish, so it's a dark cloud cover. So after you see that formation that formed a possible high, you could trade on the close of the bear candle that formed a dark cloud cover as a sell order. You would have had extra confirmation by then because it would have formed your resistance. So that again showing us how we would use it only if it forms a high or forms a low. Let's move back again. Here also we have A, B, and then we had a possible C, and a lower high that was formed by yet again a shooting star. So that would have been your third confirmation to take that trade. Let's move to a pair we actually trade more. Euro US dollar 1 hour chart. Let's have a look. Okay, here we have a low, then a higher low, and then a lower high. Well, a lower high, higher low. Now in this formation again we could have taken A, B, C, because this low did not break lower than this low. So this low is then evidently a C. But as I'm just looking at it, there's no candle information at the bottom. So in this case, you would have not used candle information to take that trade. But now, if the next candle or next candle formed candle information kind of in the same area, you could have taken that trade. Here we have an engulf, but it's a bearish engulf. So yet again, it's not a candle you would use because it's a bearish engulf, but it's in a completely wrong setting, wrong pattern, wrong area. It's not something you will use. Let's move back again. This high was formed by, well, some people call it pin bar, but shooting star. It's just if it has a long tail or a long wick, it's kind of a candle that is giving us reason to enter a trade. Again, not really something we should look at. But here we have a perfect example of using candle information. So here we've got this movement. Now this looks like a lightning bolt, zigzag, ABC. So as soon as we had a low, and this low also very nice little hammer, but we'll get to that now. We had this low, then our next low did not break lower than this low. That is showing us we need to start looking at buying. And then here again is a nice bearish engulf, which we wouldn't have used because it was not time for us to sell at that point in time. We are looking to buy because we have higher lows. This low is higher than this low, so we have to buy. This low is higher than this low, so we have to buy still. Anyway, so when price was busy coming down here and you were waiting, by this point you were already waiting for a possible C in this area with two other confirmations to trade. Firstly, we have our trend, we have higher lows, then we have our pattern A, B, possible C, and then we formed this little hammer that is perfect for us. On that close of that hammer, you could have entered a buy trade. And you see we had a little bit of down movement and then it shot right straight back up towards our D. Another perfect example of where you would have used candle info for confirmation. Again, we are looking for a buy still on this low because we still have higher lows. If there's higher lows, you're looking to buy. And price came up made a high, came back down. This low did not go lower than this low, so we are still sitting on A. We're still sitting on A, B, possible C. As long as it's higher than our previous low, we are always looking for a C and we're always looking for a buy trade. Then for a third confirmation, we got this little candle over here, which is a perfect textbook hammer. You could have bought on the close of that hammer, and then your next candle was a hammer again, just a double confirmation, taking that trade up. By then you would have also formed a support line and your demand zone. But you could have gotten in the trade much earlier just by using, well, not much earlier, a couple of pips earlier, just by using your candle information as confirmation. Let's move back to the previous trade. So we still have higher lows. We're still looking to buy. So this low should not have broken this low. As we see, it didn't. And it's not really nice candle info. It looks like a little piercing line. Not something I really would have taken at that point. But then a couple candles later, you get a hammer that is not much higher than your low, 30 pips, which you could have used as confirmation. Not something I would have done. So let's move on. And here again we have a hammer that formed our low. I wanted to zoom in to have a look at it, but it went away. Okay. Nothing really that catches my eye at the moment. Here's an example of a selling trade. Oof, here we have selling trades. Let's just go to the very beginning of where we should have started selling. Now this is where we probably would have started selling over here when we started getting lower lows. Remember, if you get lower lows, you want to look at selling. So here we have our first lower low. So after this lower low, we start looking at selling. That's a nice sell trade, but we don't have candle info, which we want to show you today. Another lower low, so you know we are still looking at selling, but selling at the highs. And here we have it. Here we have A, B, C. So we have our A, our B, and our C. Here we have the added benefits of having a supply zone. But even if you didn't have that, your confirmation, your candle info confirmation would have been sufficient, as you had a downtrend because you had lower lows. So that's one confirmation. We had our A, B, possible C, another confirmation, and a shooting star that formed our high. That is the shooting star you want to enter on the close and trade it down. Obviously you would have stayed in this trade for a couple of days to hit the profit, but needless, you hit the profit. Then we have another high over here, but there's no candle info telling us to sell. But here you had obviously your resistance supply zone, and that looks to me like a Fibonacci level as well. Moving on, again we have lower lows. We are still looking at selling, and we have A, B, possible C with a big shooting star candle. This is the candle you want to use as confirmation. On the close, which would have been at the bottom, you would have sold. You would have been in this trade for about 24 hours and you would have taken profit. Again, let me actually just put in a pending and show you what the trade would have looked like. You would have entered on that candle close. Your stop loss would have still been above the high, and your take profit would have been down here actually if you wanted the 2 risk reward ratio. Let's move on. All backwards. There's nothing significant. Here we are now looking for buys because we have a higher lows. I don't see candle information which I want to look at. Here we are looking for buys. Oh, and we have one with a little hammer. Looking for buys again. Let's move on to the next chart. So we're on pound US dollar 4-hour chart. Let's just quickly do the 4-hour before I move down to smaller time frames. But you have probably heard me say in the past that the higher the time frame, the more accurate the candle info. But let's look at this one. Here we see we've got lower lows and lower highs, which is telling us we should definitely look at selling. And here again we have a shooting star that formed a possible high. Obviously this was in our sell zone already, which that sell zone has been there for very long, and we've just been selling out from that area. But here we have a shooting star that formed, and you could have sold from there. Then, well, our most recent high was also formed by candle information. It was formed by a piercing line, well, dark cloud cover, because it's bearish, and you could have sold on that candle close. But all these candles in the middle, you disregard, because you need to look for bearish. As soon as we have a downtrend, we want to look for bearish candle info, and we want the bearish candle info to form highs and to form lows, form possible highs and possible lows. Before that, we were also looking at selling. Now here we were looking for buying, because here we have higher lows. Again, higher low, higher low, higher low, higher low. We are looking to buy on every single one of these dips. And the very first one, I see we have actually a bullish engulf. It's a bit big. I don't think you should have used the candle info to take that trade, because your stop loss would have been way down. Here we have a hammer that formed a low. This hammer would not have formed your first low. Even if you did take that trade, you probably would have still been in it if you followed the rules. Let's check. Yeah, if you followed the rules, you would have still probably been in that trade and still made a profit. But here you have a hammer that formed your low, hammer that formed your low. That is the hammer you look at. You don't look at the candle info that happens in between. Like here. Here we have dark cloud cover. Well, dark cloud cover candle. That is not something we're going to look at, because we have higher lows. We have higher highs. We need to look at buying. So this is not a candle we're going to use. I want to look for another random candle in the middle, like this shooting star, perfect shooting star, but it's a candle we're going to disregard. Firstly, we have to look at buying. Secondly, it's in the middle. It's nowhere close to a high. Your candle information needs to be on a high, needs to be on a low. That's the only time you'll ever use it, or in line with a high, or in line with a low. Like here where I have a hammer and a hammer, two hammers next to each other. You can trade on the second hammer, because the second hammer is exactly the same price as your first hammer. Again, we are looking at buying, and again a hammer. Well, we have a little hammer over here. You could have actually taken the trade on this hammer, because this hammer would have formed your first low at that point in time. I just want to make it as realistic as possible. And that point in time, this is what your zigzag indicator would look like. The line would have not been over there. It would have been over here at this point in time. And this hammer would have formed your low. So this is the hammer you would have probably taken your trade on first. Well, not actually, because it was 11 o'clock at night. But if you'd taken your trade on that hammer, you would have still been in the trade for this one, because your stop loss still had to be below this hammer's low. But you could have taken then the second hammer, which would have been this one, because that would have still been a candle information that formed your low. Actually, I see here we have also a piercing line, which is also kind of in line price with the hammer. But let's move on. Let's just delete that line. Here we have ranging markets. At this point we would actually be looking for a sell, and we could have sold on this dark cloud cover over here that formed your high. But I'm looking for nice candle information. Let's move down to 1 hour charts and have a look at that, what we can see. So at this point in time we are still looking to buy. Well, here we were looking to buy, and we had a low that was formed by a hammer, which you could have bought on. You could have bought on this hammer as well, because this hammer is still in line with the price of the hammer that formed the low. This hammer is also kind of in line with this hammer that formed the low. If current price forms a hammer anywhere from where price is right now to the previous low, if we get any candle information within this zone, this is kind of how the buying zones and selling zones also work from the newsletter. If we are getting a candle information within this zone that is not lower than this low, that will signal us to buy. So if we form a hammer over here, or if we form a bullish engulf or a morning star, or any of the candle informations that we use, that would signal us to buy, because it will be at a C, which is a higher low, and it would be trend and candle information. Let's see, here we would be looking at selling, and our high was formed by a shooting star. So that is a candle you would have regarded to trade with. Here we have higher lows and hammer, 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 hammer. You could have actually taken your trade on that hammer already in this hammer. And again, a low that was formed by a hammer. Here we have a morning star. Okay, so let's just get down to it. Oh, perfect, perfect, perfect. Lower highs, lower lows, signaling us to buy, to sell, and a high formed by a shooting star. This is oof. And you had so many confirmations on this trade. You had previous support turned future resistance. I'm not gonna, let me just put a Fibonacci down, because I'm pretty sure that is a 61 fib. We had 61.8 Fibonacci. We had previous support, future resistance. We had ABC. We had trend. We had shooting star. 5 confirmations to take that trade. And this is kind of what we want to look at. Here again, we have lower highs, lower lows. We want to sell, and we formed an evening star on the high. Perfect, perfect candle information to use. Again, lower highs, lower lows, we have to sell. Shooting star formed our high. Perfect candle information, and so on and so on. I'm not going to go through a lot of charts, but I'm pretty sure everyone gets the picture. The only way you need to use candle information is the candle needs to form your high, or needs to be in line with your high, like this. Perfect inline, hammer, hammer. Ach, shooting star, same level. Because you would have probably traded on this shooting star. Because at this point in time, your zigzag indicator would have looked like this. Okay, it's not from formation, but if you used that shooting star and that shooting star. So the only thing it really comes down to is just using the information, the C info, candle info, to form highs and form lows. Any other point in time you get candle info, you completely disregard it. It has to form your high or your low, or form your higher high, your higher low. Just to follow, it has to follow your price action. You still need 3 reasons, you still need 3 confirmations, you still need your supply and demand, your price action, but the C info is a great tool to use only at the right spots, highs and lows.